In this lecture, we're going to be looking at the RSI, the Relative Strength Index. Now, this is another indicator, another very popular indicator. And the RSI is a momentum indicator, And then let me just load the RSI here. It's RSI. So when you load the RSI on TradingView, you see, now this is the RSI, and it tends to come with some other settings. So some other lines. Let me just edit it. Let me just make here white, make the background white here, and then this yellow color, this RSI based MA, it's a moving average. Let's just make it white so as to blend with the background. We don't want to see it. I don't want to see it. So this is the RSI. This line is the RSI line, and then these are the levels. So what the RSI does is it measures the momentum of the price, okay, the momentum of the price based on the period. Based on the period. Now, when you come to inputs, you see that RSI length is 14, so it means RSI period is 14. These are the MA settings, are the settings for the MA, for the moving average, which we just kind of disabled here. Okay, so the period is 14, so it's looking at the last 14 candles and then looking at their momentum and then plotting a graph below our charts, a graph of 0 to 100, 0 to 100. Okay, and then this graph of 0 to 100 is basically the graph of their momentum. Okay, that's more of the sizes of the candles, Okay, that as you can see here, we have green candles, we have red candles. So the sizes of the candles, okay, kind of determine the momentum of the market, kind of represent the momentum of the market. So the RSI plots the values on this chart and then tends to give us overbought and oversold levels. So typically 30 will be an oversold level, while 70 will be an overbought level, or let's just say levels closer to 0 will be oversold levels, while level closer to 100 will be overbought levels. So what are overbought and oversold levels? So these are levels where a lot of traders have entered the market. So it means when the thing keeps coming towards 0, it means more and more sellers are entering the market, and then at points like this, the market tends to just correct, okay, or reverse. At these points, the market tends to correct or reverse. So at points where the market tends to be overbought or oversold, the market tends to reverse or correct. But that's not a guarantee. It means that you also need other forms of confirmation. Let me just drag this down. So it means you also need other forms of confirmation. Okay, so traders would typically look at levels like this and then wait for the market to start trading below these levels for them to look for short opportunities, selling opportunities. Likewise, for buying opportunities at levels like this where the market has crossed below the 30 level and then gone down like this and even starts crossing above. Okay, so when the market starts crossing above, we now tell ourselves that we've entered a period of buying. Okay, so some traders also tend to use this tool by focusing on the 50 level here. Okay, we have the 50 level. Okay, the 50 level. So some traders might say that when prices are trading below the 50 level, it means the momentum for selling is strong. When prices are trading above the 50 level, it means the momentum for buying is strong. So therefore, they look for buying opportunities. Well, like I said, you have to use this in conjunction with other forms of technical analysis, just like how we've spoken before. Okay, so nothing in forex is 100% correct. Nothing is 100% correct. you have to use multiple forms of technical analysis to confirm your biases. Okay, so typically this is what the relative strength index is and what traders use it for. They use it to find the momentum of the market and then points of reversals, points of correction. So in a trend, for example, let's assume we are in a very powerful trend. Let's say we are in a downtrend like this. Let's delete this. Let's say we're in a downtrend like this, and we've observed that we are in a downtrend like this. Okay, so when we are in a downtrend like this, at points where the market then comes to overbought levels, we tend to get more confidence of re-entering in the direction of the trend. So as you can see, the market came here, okay, the market was making lower lows and then it's consolidated around this point and then came and tested this trend line while also being at the overbought regions. Okay, so as it's at the overbought region, you see that it now continued selling with the trend, and then as you can see, after coming here, it retraced and then went towards the overbought region and then continued selling also before it now came and broke. And so that's one way to trade with the relative strength index, RSI. Okay, so you can learn more about this indicator, learn more about how to use the indicator. You can see a perfect example here at points where the market, okay, it really didn't go as low as 30 at this point, but it was just trading above 50. So this tells us that the uptrend is very powerful. Okay, the uptrend is very powerful, has a lot of momentum. You can see it just kept going up while price kept trending up. You can see another example here. This little downtrend here, you see that whenever the market retreats to a point like this, it fell. So we could use the RSI for confirmation and for directional bias. That will be it for this lecture. In the next lecture, we'll be looking at our last indicator, which is the MFI, or the money flow index, which is quite similar to the RSI. To see you in the next. Bye.